All right, looks like everybody is coming in. So again, just to reiterate, appreciate your time. On that note, we're going to go about 30 to 35 minutes for this presentation. Considerate of everyone's time. Everyone will be muted throughout the presentation. If you have questions, there should be a box on your panel. Send those in. We will have 5 to 10 minutes to go through questions at the end. So again, everyone will be muted. Hold questions till the end. We're looking about 30 to 35 minutes for the presentation. It is being recorded, and that will be sent to you when we are done, along with a copy of the PowerPoint. So again, recording, copy of the PowerPoint will be coming to you when we're done. So reason that we're here is to talk about occupational accident, also known as OCAC. I'm going to just get to the agenda. We'll give you an idea of what we're going to cover, and you know, kind of again the point of being here. We're going to do a brief overview of NSM, who we, our company is. Whenever I'm in a presentation or anything like that, I always like to have an idea of, you know, who's talking to me, what is their perspective, their background, their expertise in this, where are they coming from. So very brief overview of also what we do. What is occupational accident? I think a few people have reached out prior to this, said, what is it? So we want to just touch on what the coverage is, and then also how it fits into the market, the economy, how the policies are structured. So get deep on what occupational accident is. And then discuss why we think it's an opportunity that's a good coverage now, but where we think it can be in the future with some of the economic trends that we see, and where we think as an industry, as insurance professionals, we're missing the boat. So what OCAC is, the opportunity going forward, and then if you are writing OCAC, if it is something that you want to get into, how do you set yourself up and how do you set your insureds up for success? You know, what questions should you be asking? What profile or telltale indicators should you be looking for? How, if we're going to do this, how do we do it right? And then lastly, how we can help you, how we can, provide value and help you get set up to pursue this coverage. So yeah, brief agenda. Let's get to it in the essence of time. NSM Insurance Group, if we just hit the next slide. NSM Insurance Group is a specialty company, insurance company, doing $1.6 billion of annual premium, distributed across 20 different programs. And the way we work at NSM is that we get deep and wide in what we're doing. We pick niches, we pick specialties, we master it, we learn it, and we understand it, and we do the same thing day in and day out, so we are able to provide value. We don't try to be everything to everybody. We don't try to be, a little bit of this, a little bit of that. If we do something, we're going to do it. My team is working with independent contractors all day, every day. That's how we've come to develop this specialty in occupational accident. That's why I'm talking to you today. NSM we write in all 50 states and have a presence in 19 countries. We have 20 different programs. Each of them have different brand names. I think the next slide will show you a good representation of those different programs. So, you may be working with NSM programs and know that brand name, but not know that it goes back to NSM. The company, we have Allcomp, that is an expert writer of pretty much any type of workers' compensation. We have KBK, they do towing, addiction treatment, ATPs write addiction treatment. So those are the different niches that we were in. If you jump on our website, you will see obviously a much more in-depth overview of each program, what it does. Please feel free to jump on there, reach out. But it's the type of thing where I think this industry is getting so segmented and getting so specialized that someone doing nonprofits, they may only know some nonprofit carrier. Someone doing transportation, they may be familiar with my team or KBK or another team. So again, please feel free to jump on nsminc.com, a little bit more about the company, what we do. Any way we can help you guys and help your insurance, more than happy to. So, without further ado, just to dive down into the topic of the day, what is occupational accident? We call it OCAC, OA. We see multiple different abbreviations for it, but OCAC is a compliance solution to provide independent contractors with disability, medical payments, benefits, etc. It functions similarly to workers' comp. We always have to be careful and to understand it is not workers' compensation, and we cannot represent it as workers' compensation. However, it is a compliant legal solution for 1099 independent contractors. And there's a variety of items that make it very attractive, both for a company that works with independent contractors and for independent contractors themselves. And as we look at it, we'll get a little deeper into it later on in the presentation, but what is an independent contractor 1099, and that can be subject to a variety of different factors. But for most of the presentation, we will just refer to independent contractors, as a group. But what makes OCAC attractive, and why does this help play into what we see as the potential for OCAC? You will generally see 40% savings from a comparable workers' comp policy. So that in and of itself is looking pretty good. And I think that is to say, it depends on obviously the industry, it depends on the risk of the account. That 40%, not a firm number, but that is to say that generally, if a worker has OCAC, there will be some savings from a comparable workers' comp policy. The other end to that, and this is what I think is very attractive for companies that work with independent contractors, we tend to call them sponsoring companies, is the easiest term I'll use for this presentation. They will deduct the premium from each independent contractor generally for that independent contractor's OCAC. So with comp, you will have a XYZ company, will foot that bill for all their employees, independent contractors, et cetera. They will foot that comp bill themselves. Here, that premium is distributed among the independent contractors as it should legally, as they are, really business owners. They're independent workers. They're not employees. They're not W-2 employees. So they should be shouldering, the cost of their equipment, different fees they encounter, their insurance premiums that apply to them. So that's why this is also why we see some companies, basically try to say W-2 employees are actually independent contractors. They may not be, but they're trying to avoid those costs. We have a company doing it the right way. They have an ability to provide their workers occupational accident, keep them engaged, keep them healthy, keep them gainfully, working, and in a way, it's something where everybody wins. And at the same time, that company is saving money. So, and I think what we see a lot with these independent contractors they really are business owners. A lot of them love what they do day in and day out. They're deciding, when they work, how they work, what they do, and they don't want to be out of work. They're not being told you have to be here at 8 o'clock, and they're coming in with their head hung. They want to get back to work, and this OCAC is a way for them to, if there is an incident, if they are injured, to get the care they need to get back. And again, everyone wins. And another way that we see it is if you are working with independent contractors and you can provide one of these sponsored policies for them, it's really an indication of a professional, mature company who is looking to, grow, to keep these ICs retained, keep them working with you, and keep them out on the road, so to speak. So what we mean by sponsored is, easiest way to think of it is like a benefit plan for a company where, your company has a benefit plan, you have the option to enroll or not enroll, but they are providing that option for you. And because they're providing, that medical care, that health coverage for the whole company, a lot of times you're going to get better rates. You're going to be with quality, you're going to have quality coverage with the quality provider, et cetera. And that's how we see this OCAC, where each independent contractor can go get this coverage on their own. But if the sponsoring entity, that XYZ company, goes out and creates this OCAC policy for their ICs to enroll onto, it's a win. So jump to the next slide. And just to get a little bit deeper, wider on the specifics of the coverage and just how the policies work, OCAC is going to have accidental death and dismemberment limit. So generally see this like $250,000. They're going to have a beneficiary. The insured is going to have a beneficiary named. And in the unfortunate event of their passing, that spouse, that child will receive a lump sum payment, and then generally you're going to see, maybe 1% a month for the remainder of, 1% a month for 100 months to pay out the remainder of that AD&D limit. If that independent contractor is dismembered or paralyzed, severely hurt, there's also going to be that lump sum payment. So one of the major coverages of OCAC is that accidental death and dismemberment. Each carrier will have their own spin on it. They may present a little different, word a little different, but it breaks down to about the same coverage. You are also going to have disability. So contractors out for a period of time, they're going to be able to recoup their wages. Each form, has a different way of I'm calculating this, different limits. It might be 70% of earnings, or capped at $600 a week, something to that effect. But there's going to be a disability portion built into that OCAC policy. Usually 2 years, we call it temporary disability. After 2 years, it goes to what we call permanent disability. And that will end when that independent contractor, that permanent disability, when that independent contractor hits Social Security or a different trigger within that policy. Lastly, we're going to have an accident medical limit. Generally, this is going to be about $1 million coverage. It is, like it sounds, accident medical. That's going to be for a hospital stay, surgery, basic care. You're going to see a lot of sublimits in that $1 million accident medical limit, dental, ambulance ride, home health care. And each insurance carrier rate is coverage is going to have a little different spin on that. One thing I will say for occupational accident coverage, you can adjust the limits year in and year out at renewal. So, if you want look for $2 million aggregate or $1 million aggregate, or $500 a week disability, $600, $700, most of these limits are adjustable. Obviously, it will affect the rate. One thing to know about this coverage, it is generally monthly reported. And so, whereas a lot of the policies we see are annual, this is going to, each month there's going to be a report submitted for the contractors and independent contractors enrolled for that month. Rates are going to be given off of that monthly rate is going to be given, and coverage is going to be in effect for the workers enrolled for that month. So, one thing to think about too, if you're writing this, if it's a $120,000 annual policy, you're really going to have around $10,000 a month in revenue in coverage. And the reason why we have this is the independent contractor world is obviously very flexible. There's a lot of coming and going, and that is what we found over the years. The industry has found the easiest way to track enrollment is just to look at it on a month-by-month basis. Rates can be flat by month. So we got our start doing this in trucking. We write a lot of independent contractors in the trucking world. This is very established in the trucking world. And, generally there we're looking at a flat rate, like $140 a month, an independent contractor. What we're seeing with the advent of technology and a lot of the platform, the gig world, is a lot of these companies have the ability to track by the mile, by the minute, by the hour, whatever it may be. So the insurance industry has responded to that, and we're seeing an increasing ability to be able to assign rates and track these workers off of the actual time worked. But again, it breaks down to that monthly reported. Rating depends on the operations. Is someone loading, or are they unloading? What does their day look like? Depends on the site estate. It depends on the domicile of the state of the sponsoring entity. It might depend on the geographic breakdown of the workers themselves, what states they're in. Is there a loss history that we can look at? What is that benefit package? Are we kind of maxing out on the benefits or going low? So a variety of things can factor into the rate. Complete submission, application, schedule of the contractors, something about how often and frequently they work. It really depends on the industry, how we drill down there. If there's any loss runs, if they've had OCAC before, obviously we want that. And then the sample contract, which will tie into mostly the contingent liability coverage we'll talk about, but the contract language is going to be important, and I think that's going to dictate a lot of the environment of that company. So, and just to next slide. Contingent liability, as I mentioned, often goes hand in hand with occupational accident. So OCAC provides benefits, provides coverage for each individual independent contractor. Contingent liability is coverage for that sponsoring entity, that XYZ company who is having their independent contractors enroll onto this policy. Couple noticeable differences. OCAC is generally going to be an admitted coverage. The vast majority of the policies we write and we see are admitted. Contingent liability is generally E&S, is generally not admitted. Contingent liability is just going to be a straight annual policy, so like $2,500 for the year. Or as I mentioned, OCAC has that monthly element to it. What is contingent liability? So you have a worker who says, I am actually not an independent contractor, I am an employee. What happens next? That is where contingent liability steps in to provide protection for the sponsoring entity. So it will provide defense fees, it'll provide legal help, pay for legal help for that sponsoring entity as they navigate the court situation determining if that independent contractor is an employee or if they're 1099. And then in the event that a court or a responsible entity finds that that is actually a W-2 employee or W-2 employees, that is where that contingent liability policy will step up and pay those workers' comp benefits. So what we see here are not a ton of claims that end up being paid out, but when they do, obviously the nature of what I just described, they can be somewhat substantial. So not every OCAC policy we see includes contingent liability. Obviously, we recommend it whenever we can, but due to the regulatory framework of a lot of the states and federal government, and then some of the way that these companies operate, we will see insurance carriers not offer contingent liability, but they'll offer occupational accident, because you're really looking at two different risks. The OCAC, you're looking at what is the day-to-day of these drivers or workers, or what is the likelihood they get essentially hurt. Contingent liabilities, what is the operating environment of that company? Are these really independent contractors? What is the likelihood in a court of law they will be deemed independent contractors? So two different coverages that paired up, they get married up and are frequently written together. So that is just a little bit about contingent liability. Us, OCAC, this is something, again, really all that we do. We have a system that manages the process, that does the adds and deletes, the coverage verification, the reporting. Particularly for the larger size accounts, we can step in and take that on, right in all 50 states, right, with almost every major OCAC insurance carrier out there. Again, this is something that we view as very important service that we can provide to insurance agents who are focused on, the auto liability, they're focused on property, like they're focused on a lot of big headaches day in and day out. Let us take this, learn it, master it, and step up to help you. So that is just a little bit about us in this OCAC world. And now we're going to get a little deeper and wider into the opportunity and just kind of the macro environment of where we think OCAC is now, where we think it's going. So, what is an independent contractor? You see the IRS definition right there. And, it can get interesting because it's really in the eye of the beholder a lot of the time. There are certain companies in certain states that just really do things the right way. They have everything buttoned up, and these are true independent contractors. You have other companies may not be doing the right thing, maybe trying to classify W-2 employees as independent contractors. And then you have some gray, but independent contractors obviously are a growing element of our economy. And a lot of that has been created by advances in technology. And, there's two things to that. One is that, technology has allowed a lot of this gig work to happen. The other thing is that from our perspective, from the OCAC perspective, it allows us to track things that may not have been trackable before. So obviously, an insurance carrier, to provide coverage, they need to know who are they covering, what are they doing. Well, if we have the ability to package that up and hand it over and give them the ability to rate, then it allows them to provide a coverage that may not have been able to provide it before. And so if I look at the various classes, and we'll throw a slide up in a couple slides, classes that we see as pretty ripe for OCAC, we have that list now, but I think some more may be added as we go, particularly in more blue collar industries, where that tech gives us the ability to track who's working, when they're working, how they're working. So obviously, as I mentioned, independent contractors paid by 1099, they are not an employee, they are a business owner, they should be calling their own shots. It provides, flexibility, resiliency into the economy. What I always say is, again, we started writing this coverage through trucking when the pandemic hit and the economy stopped on a dime. Having that IC model in the trucking industry, the transportation industry, allowed it to really meet the demand out there of, all of a sudden hauling toilet paper became very, very, very big. Hauling, you name it, food for fine restaurants, no one's going out to eat, those contracts drying up. So how do we pivot this industry to meet the demand and get more trucks hauling toilet paper? And I think having the flexibility of the independent contractor model is what allowed that industry to do it. And that's where we see, be it Uber, right? Some of the limitations of taxi cabs, Uber, goes above and around that. And I think we will increasingly see that. And so we have these 50 million plus freelance or gig or independent contractors out there. maybe not all of them, a lot of them could be eligible for occupational accident. They've never had that conversation. They may be bare, they may be overpaying for workers' comp when they have a compliant solution that is not going to cost as much money. So again, that's kind of where we see this going. That's why we think that this is a pretty massive opportunity that is not really being talked about. And a lot of insurance agents, they're not familiar with OCAC. They may not know, how do we initiate that conversation? How do we drill down and figure out if this is really something we can go with or not? So that's just the opportunity. The marketplace, pretty small number of competitive insurance carriers doing it. Claims are pretty vital. Anytime you're talking about healthcare, anytime you're talking about, and I'm referencing, if you're writing this, what to look for in insurance carriers. Claims handling, obviously, usually going to be pretty big because there's going to be some sensitivities involved with death, with dismemberment, beneficiaries, and whatnot. So you want someone a carrier utilizing claims that is familiar with, one, the product, but then two, how do we take care of our insureds? And then, a small number of competitive carriers who have been doing this a while, who know the game, who know what they're looking for, who know how to underwrite, generally, as we always see, generally in the insurance industry, they're going to be around and they're going to be steady and they're going to be stable in their rates. The flip side to that is if this is something that you're looking at getting into, OCAC, remember, recommend consistency on the other side, where if you have a good situation, you've been with someone a couple of years, leaving over $1 a month rate per IC might not be, the best decision, because again, you may have to come back to that carrier later. So again, we just recommend on both sides, let's be fair, let's be equitable. If you are getting into writing policies, we generally see two different structures to policies. One is an association, and that's where a carrier may set up, Independent Contractors of America. And, that's an association domiciled in the state of Illinois. And, they'll provide OCAC through that association and maybe some other benefits. And, that is the name of the policyholder. And everyone that we write that goes into that association, they're under the association's policy. They'll generally pay a few dollar fee to help provide some of the other benefits that come along with the OCAC. That is one way we see it written. Another way is just direct, where it is XYZ, Independent Contractors of XYZ Company is the name of the policy, and then again, those independent contractors from all of this policy. So nothing big there, just something to point out if you start talking to people, having conversations, you see a couple policies, something to be aware of. So I'll move on to the next slide. List of different lines of work that we think might be pretty good candidates for this, and that they're growing, or there's a lot of, it's either IC heavy, or some of the tech enables them to be tracked. But again, everyone thinks of Uber, they think of Lyft, but there's a lot of everyday lines of work out there that could be good candidates for this. We've seen a fair amount of this written in home healthcare staffing, situations like that. So I think a big thing is aggregating. It is always easier to write these policies in number, like anything, than ones, offs, and twos. And we have some master policies we can look at. But anything where there's some aggregation in these, even if it's 10, in these lines of work, that's something that, hey, let's talk, let's see if we can figure something out. And then in some of the more prevalent, like trucking, we have master policies where we can put individual independent contractors on. So. Again, we're going to send this out to you, and you guys may have some of these insureds in your book right now, or aligned or similar lines of work to these that you might want to just have that conversation and say, hey, do you have comp? Do you have independent contractors? How does that work? So, slide. Regulatory environment, very big. So essentially, we have a suite of each state has its own laws, and then it has its own court decisions on those laws. Then you have federal laws, federal court decisions, and then you have, like the Department of Labor. You have different regulatory agencies looking at this. So each state really has its own mix, its own almost stew thrown in there of factors that can determine if someone is truly an independent contractor or not. So an independent contractor in Tennessee or Florida may not be considered an independent contractor in California. And this is something where we're always monitoring this, get an idea which way the environment as a state is going. California's one, they passed AB5 that really tightened up the definition of an independent contractor. And then Prop 22 was a referendum that then loosened up, basically carved out Uber, Lyft, some of the big platform companies. They carved that out of AB5. Well, then court overturns Prop 22, basically invalidates it. It's just this back and forth. That's something that we always have to pay attention to when we're writing this, is just seeing what state is the company, XYZ company, domiciled in, and then the independent contractor mixed in that company, what states are they in, just to have an idea of what we're dealing with. We also see some states like Colorado's going the other way, where now we're starting to dip our toe in and say, hey, is this something that we think we can write OCAC in Colorado? So, Northeast, West Coast, generally tougher on independent contractors. North Carolina is kind of an odd one that gets thrown in there. West, Midwest, Southeast, generally going to be more friendly. But again, what are the operations of that company? How are they running things? What does the language look like in their contract? A lot of variables go into this. We will see occasionally occupational accident offered without contingent liability. I had mentioned that previously, and that may be, in California, really running things pretty tight. But the fact that you're in California, it might make an insurance carrier a little leery about offering that contingent and putting themselves out there for basically paying legal fees and comp for 60 truckers. Like it could get dicey. So this is pretty big. Somewhere, again, we're seeing this every day, working with this. So any questions, reach out. More than happy to answer on kind of each state environment in regards to regulations for independent contractors. So we break this up into like 3 segments. They're not exact. This is just kind of the way we look at it, just through experience for writing OCAC. Trucking, very mature, very prevalent. Any trucker that is working with independent contractors is going to be aware of it, familiar with it. If you're going after an account, they might have OCAC already, very good chance they do, and it's more of a competitive type environment. Platform, a little bit different. I'd say after trucking, the most prevalent in that kind of platform. Easiest way I could think of to say GoPuff, Uber, Lyft, the big tech-heavy companies that have transformed our economy. But you're going to find a different ballgame there, where a lot of them are big or getting bigger. They can drive a hard bargain. They may be changing ownership, private equity firms going public, where they bring in different insurance people. So, very big, very attractive, but you just have to be aware of a couple items going in to have some of those platform type conversations. And obviously, there's some insurance practices that specialize in that, are used to having those conversations. Gig is the easiest way I could think of to say almost everything else. That's where we see the most kind of blue ocean, the biggest untapped potential opportunity for this world, because a lot of those conversations aren't being had. And I think, if we keep having those conversations, if we keep, putting it in front of them, we can see some penetration, like in the trucking market, the transportation world, and the rest of this gig world among these security guard companies or proofreaders or, the staffing world. I think a lot of it is just us as an industry educating and getting people comfortable with it. So that is where, again, we see a lot of this going in the future, and where I think, collectively, we just need to do a good job of educating our insurers, because at the end of the day, we are looking out for them, putting them in the best possible situation to run a business and to take care of each other. So again, 3 rough segments of the market. Keys to success: you're thinking about, hey, I might get into this. I haven't done it before. This is something I just want to take a look at. Where do I start? Is current coverage in place, right? So do they have comp? Do they have OCAC? Do they have nothing? Fair amount of time they have nothing. What we see in the independent contractor world, they may be working for multiple companies, multiple jobs, and they don't have one with any of them. But I think that will then help frame the rest of that conversation, because if they have comp and they're truly independent contractors, like they may not have coverage under that comp policy when push comes to shove if a claim is filed. We need to get them in a good place, and again, take some of that cost burden off of your insured. What are the owners of companies' philosophies? What are their goals? We see people, I want nothing to do with this. I utilize independent contractors, but like put it on their PEO, throw it somewhere. I just want nothing to do with it. We have other ones that may see some value, just may need some talking, just explaining it's okay, it's good, this is a good thing. And then, if workers' comp is in place, what's the current rate? Because what we see in some industries is the comp rate is not that different than the occupational accident rate. And, there's really not going to be a ton of savings. They're going to try to really just get classified under workers' comp because at the end of the day, there aren't limits. Whereas occupational accident, you will have $1 million limit. Comp is more open-ended, is more broad coverage, right? So again, a few of the things to look at, and then what are the company's operations? What are they doing day in and day out? What is the geographic distribution? We touched on that. If we got one off the ground, how many do you think would enroll? How many would, maybe we have a meeting with them, walk through, how many people would like something like this? What is the tech capability of that company? Are they able to report or present? Again, that's something where we, other people in this world, can step in and help get that set up, but something to consider. And again, if the sponsoring entity does not want to get involved, can we try to figure something out on the back end to get something going, either write each IC individually or work through something else. So again, just some things to think about, questions to ask. Every situation is a little different, but that's how to orient ourselves. So best practices for a compliant IC model, again, another area where as insurance risk management professionals, we can provide value. Are they utilizing a professional contract? Are they working with an attorney who understands the independent contractor model? Something we highly recommend. Does that contract overly control and direct, or does that treat them like an adult, like a professional? And does that contract give them the ability to operate truly as an IC? If the ICs are incorporated as a business, like we just saw that a lot out in California, it helped to make a lot of them compliant out in California. Incorporating as an official business, as an independent contractor helps. You can't mandate exclusivity that you can only work for me. Actually pay by 1099. Another big thing that we see is the trappings of employment. Do they have business cards? Do they have an office? Well, it's kind of hard to say someone is not a true W-2 employee if they literally, have an office. They're set, all the trappings are set up a certain way. And then, are you directing them to come to training? Are you paying for their equipment? Are you making them wear a uniform? A lot of very basic things that if we can avoid that, we can really set ourselves up and really run our business the right way. And lastly, I would just say consistency is key. I think a lot of times we see entrepreneurs, we see this, a variety of different industries, entrepreneurs who are having success, they're kind of still in the day-to-day. They might have ICs working with them. Some are family, some are friends, some are, strangers that live in other states, making sure that everyone is treated fairly and equally. And this whole slide, when it comes down to it, in a court of law, if it's Exhibit C, something is put up, how will that look, right? So something I think that as we're working with them to get themselves compliant and really to support their growth, are they set up for success in that regard? That if someone does come after them, be it a state attorney general, be it an employee, that when we line everything up, it kind of passes a smell test. That it looks like, they feel like truly independent contractors. Again, this is something else. There's a lot of law firms who specialize in this, always there to help people do things the right way. So next slide. Recent successes, I have like 3 of them up here. We'll go through them very quick. These are literally just to give you an idea. On the bottom, I have some limits and stuff, what policies might look like, kind of help you just see and feel it a little bit, help you get familiar with it. Pennsylvania-based healthcare staffing risk. There you see the rates and whatnot. This was a new policy. They had not had OCAC before, so that's more of an education play, walking them through, getting them comfortable. Reporting can be interesting on some of these, so just getting them set up on the reporting, the process. Once people get in the groove, once they become familiar with OCAC, like they like it and it's good and they're set, but just get them over the hump, getting a company in the right place. So it's healthcare staffing, dump truck risk. This one we wrote recently. Some carriers, some people don't necessarily like dump trucks. 1 or 2 elements to this account that, were a little more difficult. So this is the one we had to go to Lloyd's. So like anything in insurance, there is a Lloyd's element to this coverage where they will come in and they'll look at things a little bit differently. Some of the domestic carriers have. So this is something where particularly if it's a little bit of a unique, something outside the box, we do have that capability. Hey, let's go talk to London and see what they're willing to do and not do. And again, like I said at the bottom, you just kind of get an idea of some of the limits and whatnot that we'll typically see on this. This one that we had gained that dump truck risk because of some issues on the reporting that it just wasn't getting done. So that's where we had to step in and take that over. Last one, this is kind of the bread and butter, how we grew up on a trucking company. Only thing about this one that I would mention is that this was with the current carrier, but a different broker, and it was moved to us by BOR because of some servicing and other issues with the other brokers. That is something where, the agent taking it over reached out to us and said, hey, look, is this something that, we have this relationship, we don't really know OCAC, but it's with X and X carrier. Can you guys step in and just help us place this? And we did. So a few examples of accounts that have OCAC. Next slide. How can we help you? Again, we're here. This is what we're doing all day, every day. NSM is committed to, putting the technology, the people, everything we need in place to help you. If you guys reach out, we'll respond quickly, jump on. We're able to get on calls with insureds, really give you whatever you need to go have the conversations to get people comfortable with this. I think at the end, we have a slide too with just reiterating what we need for a standard submission. And then also we have a website link to go to if you have a submission to send, as well as our contact information. Again, this will be sent to you so we can get that locked up and get this going. So there it is. Yeah, see, there's a link to the website that will have a portal where you can send submissions in. That's what's needed for a submission. And again, the last side will have our contact information. So that about wraps it up. If you have any questions, please send them in. We got a few minutes left to review them. Other than that, very much appreciate your time. I understand that everybody is very busy out there in the world, and appreciate you spending your time with us. So let's see what we got. Okay. Yeah, we got a few questions. I'll run through these quick, and then we will wrap things up. How does invoicing of these accounts work? So generally, we get a monthly report. That I mentioned before. There will be 39 ICs enrolled at a rate of $126 a month. We will then invoice you and or the insured for that, 126 times 29 or 39 independent contractors. We will invoice you. A couple different ways we can do that, but the billing is all based off of that reporting, right? And again, reporting, every account's different ways we can structure that depending on the needs of the insured. So. More applications. Application can really depend on really the size of the account. We have them on our website. If you have a question, reach out to me. I can get you, if it's one IC, if it's 20, what the industry is. We have a few different apps we use. Just jump on our website or email me and I'll get you the right app. I just don't want to get you one for gig and you're looking at a trucking account or something to that effect. 3 years of lost runs. Yeah, so if they 3 years, question is 3 years of lost runs of what? Their workers' comp lost runs? No, if they haven't had OCAC before and there are no OCAC lost runs, then we will try to find other ways to assess the risk. Plain and simple, workers' comp loss runs aren't really going to do justice for what we're looking for. Might be able to take a look at it, but if they do not have OCAC loss runs, then loss runs are not going to be applicable. Do any workers' comp carriers accept the OCAC in lieu of a? Okay, I think what someone's asking is a couple of different things. Some workers' comp carriers may try to pick up these independent contractors that audit. What we have found is the vast majority of workers' comp carriers, if we can provide a certificate of insurance for OCAC, they do not pick those independent contractors up. Have seen that. We write a fair amount of this, have seen a fair amount of situations. Very rarely does that end up being an issue. Yes, so again, every situation is a little different, but if these drivers have true OCAC coverage and they have COIs, everything's buttoned up, then that should suffice for the state and or the the workers' comp carrier. So can you write contingent liability without occupational accident? No, because essentially you would have someone potentially paying like $2,000 for a workers' comp policy for 20 people. You're going to need occupational accident to write contingent liability. And I think that is about it. If anyone has any other questions, please send them over now. Otherwise, we'll wrap things up. Again, thanks for your time. Let us know if we can help in any way, and hope everyone has a great day.